Well, let's bring Bloomberg View columnist and Money Strong founder Danielle DiMartino booth. Danielle spent 9 years at the Dallas Fed as an advisor to President Richard Fisher. Danielle, great to have you with us. Tell me about your thesis. What is the Fed getting wrong?
Well, the problem with what the Fed is watching is that they really should not be conflating what we think of as being discretionary inflation and non-discretionary inflation. And this is before the recent rise in oil prices, mind you, that we're seeing non-discretionary purchases on the part of households. That's things that we absolutely must buy: the food on the table, the gas in the tank, the apparel that we have to clothe our children with. That's running at 2% year over year. So that really has already hit the Fed's target. And again, that's before gasoline prices rise. What's dragging down the core PCE, which is the Fed's preferred inflation metric, are the discretionary purchases, what I like to call households' wish list. Those prices are rising at 1.5% year over year, and they're dragging down the overall level. But I think that what policymakers should be focused on as they continue to increase rates, we're expecting the first one in March, of course, is that what really hurts households, those prices are rising at a rate that's already hitting their target.
Danielle, is there, an argument that inflation targeting at this point, full stop, is an erroneous thing to do, because you're seeing these massive structural changes that are contributing to disinflation, not just in the US, but all around the world?
That argument has been very viable really since China came onto the global stage with 1.3 million other workers. And that, I think, has been a huge challenge for policymakers worldwide, because we've had these tremendous deflationary impetuses going on for the past few years. They're just so much more in focus now because you don't have one or two or three. You have every major central bank in the world incapable of hitting their inflation target, and yet, we've not yet seen households say, gee, I sure do wish that prices would rise faster. I'll take you back to Alan Greenspan in an FOMC meeting. One of the few points that he and I actually agree on is that he said the ideal rate of inflation for the average household is 0. So I do worry when you hear about John Williams being a contender for a vice chairman, because he thinks that you should actually raise that inflation target to 3 or 4%. These things really bother me.